Copen incurred in 2016 in both labor and general expenses. In this unit, we're going to analyze and account for that transaction. However, before that, let's recall the previous unit. It tackled the analysis and accounting for the purchase of raw material on 2016. Regarding cash flow, that's to say collections and payments, Copen paid up the purchases corresponding to the period January-November. This is because, in accordance to the payment conditions agreed with the supplier, December purchases are paid in 2017, 30 days after the purchase date, and therefore outside 2016, which is the period under analysis. But this transaction has no effect on the income statement, since there are no incomes or expenses related to it. This is because the purchase of products does not change the value of the company, or in other words, the company does not become richer or poorer due to this transaction. The purchase of raw materials means only exchanging money for something of equal value. Finally, the balance sheet shows the two effects of this transaction, in addition to the effect on the cash balance that is not shown here yet. On the one hand, inventories of raw material and asset increases, and on the other hand, accounts payable to raw material suppliers, a liability, also increases. The transaction that we're going to analyze now describes the labor and general expenses that Copen incurred in 2016. Firstly, we will do the same that we did when registering the preceding transactions. We identify the potential collections and or payments that might be related to the labor and general expenses accrued in 2016. In a nutshell, we will see if the transaction involves some cash inflow or cash outflow on 2016. Yes, there are two payments. Labor expenses amount to 10,000 euros per month, and they are paid at the same month that they are accrued. Copen therefore paid 120,000 euros for labor expenses in 2016. On the other hand, general expenses amount to 3,000 euros per month. However, general expenses are not paid on a cash basis, but Copen has to pay for them 60 days after they were generated. Thus, in Copen 2016 only paid the general expenses corresponding to the period January-October, which amount to 30,000 euros. The payment of the general expenses accrued on November and December is pending at the end of 2016. We reflect now these payments on the cash flow table. We show also the intermediate calculations. We now search for possible incomes and expenses with regard to the labor and general expenses generated in 2016. If the company's value increases, or in other words, if Copen's wealth increases due to this transaction, we will be able to state that labor and general expenses generates incomes. On the other hand, if the company's value decreases, or in other words, if Copen's wealth decreases due to the labor and general expenses, we will be able to claim that this transaction involves expenses. Well, in this case, the answer is obvious, since the statement itself defines these concepts as expenses. An expense can usually be understood as the consumption of a specific resource. Sometimes the resource is clear, at others less so. The resource whose consumption is related to labor expenses is the possibility to use the company's human resources during 2016. This resource can't be stored. As time therefore goes by, the resource is consumed, and Copen incurs the obligation to pay for it. The same can be argued about general expenses. On the other hand, this transaction does not involve any income. We report these expenses on the income statement. Intermediate calculations column shows how we got these results. In this case, it was really easy, since we counted on the monthly expenses. Highlight a relevant detail. General expenses accrued in 2016 and the amount really paid for those expenses during 2016 do not match. This is because Copen pays for the general expenses 60 days after they are generated. The extrapolation of this idea leads to reflect that the net cash flow of a period will not necessarily be the same as the net income of the same period. In fact, this is the most common situation. Finally, we analyze how these expenses affect to other assets, liabilities, or capital. In other words, we need to assess whether these expenses lead to variations in the belongings, the rights, the liabilities, or the capital of the company. As pointed out above, one liability changes. In particular, the liability that shows Copen's debt with the suppliers of the resources related to those expenses. Copen will have to settle that debt at earlier 2017. That's why it should be reflected on the short-term liabilities section of the balance sheet. It's clear that this transaction does not imply any variation in capital, since the owners either do not bring more capital to the company or reduce it. Copen's debt with those suppliers is reflected on the balance sheet, as well as the intermediate calculations. Let's summarize this unit. In this unit, we've accounted for both labor and general expenses corresponding to 2016. Regarding cash flow, that's to say, collections and payments, in 2016 Copen paid up labor expenses accrued in that year. However, Copen only paid for the general expenses generated from January to October. This is because, in accordance to the payment conditions agreed with the supplier, November and December expenses are paid in 2017, 60 days after Copen incurred them, and therefore outside 2016, which is the period under analysis. Now, the income statement reports both expenses. Finally, this transaction implies a variation in the balance sheet, in addition to the effect in cash balance that is not shown here yet. One liability increases, the debt with suppliers corresponding to the general expenses generated in November and December, and for which no payments have been made at the end of 2016. In the next video, we analyze and post the next transaction, which refers to the loan that Copen took out on March 31st, 2016.